Now, in the morning, we started the day by painting the big picture, conceptualizing resilience, what's it all about, and how should we define it, how should we react to it. And now we'll dig a little bit deeper.
Yeah. Coming up is a highly topical conversation on central banks and inflation. And I will be joined shortly on stage by two very prominent economists, senior economists, and they both have experience both from public and private sector, from academia, and we heard from Gunvor in the morning that Stefan Ingves, the former governor of the Swedish Riksbank, recently received this very prominent award. But what Gunvor didn't mention is that Stefan Ingves is also honorary doctor at Hanken, and I think that is worth mentioning since we are in Helsinki. And Stefan will be discussing with Leena Mörttinen from the Ministry of Finance here in Helsinki. She's a permanent Undersecretary of State, and she also has a very long background both in public and private sector, and is a macroeconomist. So,
Well, let me just quickly mention that after this discussion on central banks and inflation, we'll talk more about the future of startups and how to build resilient startup companies. What's their role in strengthening Nordic and Baltic societies, and what does the future of startup landscape look like? We've got three excellent entrepreneurs ready to tackle that subject. But without any further ado, I'll give the floor to Maria.
Okay, so Leena and Stefan, please join me on stage. Yeah. And you have some microphones here as well. So this is a future forum, so we are supposed to talk a lot about the future and what's next. But I think in order to do that in a sort of structured way, it might be a good idea to just sort of look back and maybe you could give your perspectives on how we ended up where we are, because we came from a situation with zero rate policies for a long time, or very low interest rate policies, hardly no inflation, even deflation in certain sectors. And now we're in this situation, and I think no need to talk about like exactly what's going on, because most people in this room are fully aware of high interest rates and even higher inflation, of course. So, Stefan, would you like to start to give a background on how we ended up where we are?
Well, in an uncertain world, you're always going to end up somewhere else compared to what you thought. It's not really harder than that. And then the way the human mind works is that we always think that we know, or like to think that we know where we're going. And then particularly in small, very, very open economies, you just have to live with the fact that something happens, and then you have to deal with it. What you can focus on and concentrate on is try to avoid major mistakes that you have engineered at home on your own.
Yeah.
But the rest is kind of comes from the outside, and that's a given, and you just have to eat it and live with it. And that has something to do also with this conference, because that's also about resilience. And resilience is essentially about having the capacity to deal with the unknown. That's what it is. It's all about. In this case, when we're talking about inflation, what I think also matters, and matters quite a lot, is the time perspective. And yes, you started out saying inflation used to be too low, but that's in a very short time perspective. If you look at it from 100 years, 200 years, or in the case of Sweden, because we have actually a time series that goes back to the 1200s. Average inflation is 2.1 or something like that. But having said that, it's absolutely clear that things never really normalized the way many expected things to normalize, because all of a sudden you have a pandemic showing up out of the blue, and there is no living memory of how you actually deal with that. Neither on the side of dealing with the pandemic as such, nor when it comes to economic policies in the context of an ongoing pandemic. And then of course, everything changes compared to thinking that things would be normal and inflation would stay fairly close to 2%. That wasn't the case. And then after that, when you close down all these economies and things hopefully will normalize, then we ended up with a war. And then we know what has happened to food prices and energy prices and all those things. And you just have to do your best and live with that as best as you and do your best.
Thank you. And before we let Leena elaborate a bit on also where we are and how we ended up here, Stefan, you started to talk about avoiding homemade problems. And then you mentioned a few black swans and events that not even the Swedish Riksbank probably could affect. But in your opinion, are there any homemade problems that we need to deal with?
Yeah, one well-known problem is that in Sweden we have mismanaged our housing market for decades. And no one is willing to deal with it. And it's very much an issue of ins versus outs. Yeah. And basically another way of expressing that is to say that the median voter has granted himself, herself favors. And that's the root of the problem. But that's a different seminar.
However, a very interesting one, if you ask me. Leena?
Thank you. And I take a bit of a view of the Ministries of Finance because I think the resilience issue is a key issue here to discuss. And I think the job of the Ministries of Finance, as well as central banks responsible for macro-prudential supervision or supervisors in general, is to prepare for something unexpected. And somehow it just seems to be so difficult to do. I mean, the long-term perspective is the role of the Ministries of Finance, and then also not only on the monetary policy side, but fiscal policy side, it does matter. Although some say differently, it does matter for inflation as well, particularly now that we come out of an extremely loose monetary policy and we have had rather loose fiscal policy as well. But if you take a longer term perspective, and I see that in the debates, because I mean, everything that we do, although there are technocratic features to it, this is a people business. It's a people business when you talk about bank stability. It is what people tend to believe when they are together. And it's surprising, I have some long-term colleagues in the audience. People always ask, how do the economists, do we get together in seminars and agree what the economy looks like? Because our forecasts are so similar. And we rely on same stories, but of course we use the same data as well. So there are these beliefs that start taking hold, even with the most experienced economists. And it was interesting to see over the period of time when the globalization was really a strong driving force, how we couldn't really explain why there seemed to be a savings glut. There seemed to be a lot of savings coming to the market, and at the same time, not enough investments. And we saw the money sort of flowing. There was carry trade before the financial crisis. It went to wrong places for wrong reasons. And even if you raise the rates, trying to calm things down, actually money flew more towards exactly where you didn't want it to go. So it was difficult to control. So something in the global system and the liberalization of financial markets more widely caused a huge savings cut. And at the same time, we also moved from having the local labor force into global labor force. So there were drivers in a thing that was sort of quite understandable, at least to me, that it was pushing the inflation down, and of course central banks followed suit, and the rates were very low because there was demand and supply problem on the side of savings, too much savings versus investment. But then something changed drastically when we had the global financial crisis, and to me, looking at it from the point of view, again, from what people tend to believe, before that crisis, a lot of the important, really powerful and sort of a leader type of central bankers and policymakers said that, don't interfere with markets. Markets are always right. So, I mean, politicians were pushed aside saying, don't do too much because markets will set the price right. They can price the risk. If you interfere, you mix things up. But when the crisis happened, the global financial crisis, then all of a sudden it turned on a dime, 180 degrees, and then all of a sudden markets were always wrong. And since then, everything has become political, because when we started moving away from globalization, because there were also political pressures in pushing that direction, all of a sudden, politics started to spread. It wasn't only that you have to have tougher regulation on banks, because we realized that, banking, the system doesn't really price systemic risk. So somehow there has to be huge buffers on banks in order for them to prepare for that unexpected that we've been discussing, for them to be resilient. But it sort of continued from that because we kept on being hit by crisis. And of course, COVID was extremely, it was an exogenous shock, no matter what you hear about, different laboratories having a role there. It still spread like a wildfire. And in our wildest dreams, although we had that scenario, so it is known unknown, we had a scenario that there could be a pandemic. It sort of turned out to be much wider and much quicker than we thought. And we had to start thinking about things. And what worried me the most is that we ended up bailing out everybody. We didn't only discuss bailing out banks, and bailing out banks is always very sensitive. Nobody likes banks, frankly, so that's why nobody wants to bail them out either. But when you start talking about the normal companies, non-financial companies and people, then government money started playing a huge role, and everything became even more political. And what do you think is going to happen when this geopolitical, geoeconomic thing progresses? Now we are in a war of aggression started by Russia, completely unfairly in Ukraine. And we have an energy market change of the speed and magnitude that we've never seen before because of that development. When things are geopolitical, they are always political. So now everything that used to be economic policy is always politics as well. And it's politics towards the third countries. It is about the US Inflation Reduction Act, it's about Chinese subsidies, it's about the green transition, our technology, strategic interests. And that makes it impossible for technocrat who looks at the data and tries to devise a simple machine that automatically reacts. It cannot. So I fully agree with Stefan on the fact that we just have to be prepared even for the world that is political as a small open economy. But that takes extremely clever design on how to survive in geopolitics and geoeconomics, which is the game for large countries and large economic areas, and still come out as a winner and protect your democratic model and your values.
Yeah, and I think that is a very, very good starting point for the rest of this discussion. If we come back to where we are right now and where we're headed, and the theme or headline of this seminar is, or this session is, have central bank lost their ability to control inflation? You're talking about clever design and intelligent decisions. And so, Stefan, with all your experience, what?
No.
Yes, yes, with all your experience.
No. I mean, if history gives us any guidance, clearly you can control inflation. I mean, just look at the time series, and that's the conclusion. But then it's not always easy to do it because it's always sensitive, because when you have inflation, you have winners and losers, and you have a debate about that. And then there is a tendency, because that's the way the human mind works, to have always people looking for a free lunch, thinking that there is a better way, or there is an easier way of sort of controlling things. But ultimately, at the end of the day, it's all about aggregate demand and aggregate supply, and how you control that, and that is clearly doable. Preparing for this seminar, I looked at what has happened in the past, and history never repeats itself. But on the other hand, you can find episodes in the past that are not identical but somewhat similar. And one particular case that comes to my mind is basically what is called the Korean War inflation in the early 1950s. Because then you had a spike due to the war and various supply constraints, and then a few years later, inflation came down. Then if we're talking specifically about Finland and Sweden, we have a pretty bad period in the 70s, 80s, and early 90s where we made collectively over and over again made the same mistakes, and that created too much inflation for quite a long time. And then we have now gone through a long period with very low inflation, and that essentially means that the inflation targets, the way they have been designed in different parts of the world with slight differences, have never sort of been fully tested when inflation is too high.
Yeah.
And that's the episode that we have to deal with going ahead.
And are the tools that you have in the toolbox, are they still relevant? And how would you use these tools if you were giving advice to your
No,
predecessor?
I don't give advice to those who actually run central banks nowadays, because I've done it for 17 years myself. And then you get new advice every day from much wiser people than what you are yourself. So I'm not telling them, and it's not my job to tell them what to do and what not to do. But generally speaking, when it comes to dealing with inflation and the monetary aspects of inflation, there is no lack of instruments. So you can always get the thing go to where you want it to go. The hard part here, when we're talking about this, in our types of democracies and economies, is how to get inflation down in an orderly way. That's really the challenges. And you sort of referred earlier to this idea that we can control things, and that you have kind of engineers sitting in the boiler room, tweaking the levers and doing this and that. That's the hard part, because there is always this idea, particularly when you read the newspapers, that somebody is in charge, and these guys are in total control of what's going on. And how come they can't make this happen without pain tomorrow? But in the real world, it's much more complicated than that. But having said that, this will probably differ in different parts of the world and between different countries, also depending on how the economy actually functions and what you do or do not do on the fiscal side. Because on the fiscal side, you can actually, in a bad scenario, sort of undo monetary policy. And that's quite a challenge.
Yeah, again, easy to agree. And I fully agree that the tools are there. The question is also about the political stability issue of how can we explain that you have to do, as a central banker, tough things in order to get the inflation under check. Because for a while, when there was no inflation, I saw this, you know, they call it a theory, but really it isn't. Modern monetary theory thinking taking hold, which is this really bizarre thinking of just looking some sort of checks and balances and thinking that actually the role of inflation is for the politicians on fiscal policy side, and central banks just keep on financing the governments who then use taxes to control inflation. It was a really, I mean, this just in the, but it sort of, although nobody sort of suggested exactly that, I think it sort of polluted a little bit of the thinking of how the system functions and how the monetary transmission mechanism functions. And the role of politics got so strong that all it was about the governments doing fiscal policy and the fiscal policy being in the lead. And that's, of course, also not how it should function. Exactly. It was interesting to see in European discussions when the monetary policy was very loose because we were worried about the crisis and there were really bad economic scenarios of what is going to happen in COVID, how much the GDP will drop. So the central banks kept on, keeping it monetary very eased. And of course, then, for example, recovery and resilience facility was put in force. The next generation EU was established, and everybody around the table was so happy that the fiscal policy and the monetary policy pushed the same direction. But now, when fiscal policy should be tighter, or at least normalized or neutral, it is so much tougher to do. Because it's easy to say that you agree with central bankers when they are very loose, but it's much more difficult to agree with them on a political side when they are tough, because they actually, it may affect the economy. The intention is to cool it down. The intention is to reduce the demand pressures, particularly the second round effects from the energy crisis, high energy prices, and so forth. So, I mean, their job is not easy because when it's no longer fun, it's more difficult to explain to the people. And when you haven't seen inflation for ages, you may end up in a place where you think that inflation is an unhealthy phenomenon, although it's a normal phenomenon of the nominal reacting to what we have done, and central banks have all the tools to put it on check. But they have to watch out for their political independence. They have to be independent in their decision making to be able to watch over the price stability. And that's why we also have to respect that on the political side, on the fiscal policy side. We should not interfere and not tell them what to do. No matter even if you are a retired central bank governor, we should still leave them alone on it.
Leena, you are not retired. You're in the center.
Probably never.
You're in the center of economic policy making in this country right now, and in this close little circle, I think many of us, we are curious about not only the theories, but like, how are you reasoning for the time being? What are your biggest concerns, challenging? You know, can you give us a little bit of flesh on the bones on sort of how your morning meetings sound these days?
Well, first of all, I have to say that in the EU circles, I think, you know, it's been very sensible, very responsible discussion on issues such as, you know, accelerating inflation and the concerns about it. I think everybody around the table, whether they are in the Economic and Financial Committee, which prepares the ECOFIN meetings, or whether they are the ministers around the table, agree that inflation is a real problem and we should get it under control. There has been discussion about well-targeted, temporary, tailored instruments, but you can believe it is the most impossible thing to do, well-targeted, tailored, and temporary instruments when you are in a hurry. And politicians are under enormous pressure because people are completely confused how this got out of check so very quickly. So I think it is sensible, they are responsible, and yet their hands are tied, and they tend to then do what they can, which is creating quickly tools that are usually wider and help a bigger bunch of people than they actually would be necessary. So not the weakest parts of the society, but perhaps even the middle class and upper class, or they can't even differentiate, because we've been actually discussing, can you build two-tier pricing models for energy and whatnot, how to make a sensible energy support measures for the weakest ones, and that is extremely expensive, and it's extremely expensive no matter how you do it. So I think they are squeezed hard, but they are not irresponsible. They try the best, but we don't have a toolkit in our box, unlike central bankers, who have immediately, they know what they should do when they see the price stability being threatened. But that is not for the fiscal policy side to do, and they don't have that available, particularly as a shock is like this. So I have full sympathy for their difficulties, and I do think that they do their best. But they rely on us as well, and perhaps we haven't been quick enough in creating tools. But the discussion is ongoing in Europe, that there will be a next winter. And we will see then what happens with energy prices as well. So we have to be prepared. And I think that is a very relevant, very responsible discussion. And it has to do with the policy coordination in the European level. And I think that is ongoing. And I'm proud of all the politicians around the table, because they actually are engaging in.
Mm-hmm.
I mean, there is always a tendency when you deal with these things, and particularly if you come from the academic side, to think that you can optimize and that you can fine-tune things. Yeah. But in real life, it's a lot harder than that. Because actually, the effort it takes to get to a decision-making point is very often just enormous in itself. And when you eventually decide, there is no way that you can know in detail where you will end up. So there is certainly a difference between theory and practice when it comes to this. But we do know, and we do know quite well, how not to do things, and I'm not going to spend time on that, but you can read up on Argentina and a few Venezuela and a few other places, and you'll get some very, very clear lessons about how to mess things up on a grand scale in a very systematic way. So don't go down that route. And what I do think is important when it comes to the two countries that we're focusing on today is that for the past 200 years, on average, we have done the right thing. Otherwise, Finland wouldn't be the happiest country in the world. And I mean, so we tend to get organized eventually, but from time to time we run things into the ditch, and then people get upset because the standard of living starts falling, and then we reorganize things in such a way that we put the pieces back together. I know your situation, but I'm free to say whatever I want, so I'm going to say it. Finland does have a problem with its fiscal.
Shall I comment?
Yes, of course.
I think that's Finland, all the decision makers and everybody is pretty much in an agreement on it, that our trajectory is worrisome. And we are sort of leading the pack in Europe because we move first towards demographics, which is extremely expensive from the public sector point of view. And at the same time, I mean, there's an enormous shock to Finland because the eastern border is basically closed and dead. So we are an island again. So reinvent yourself in this situation. It takes quite a bit of courage, but it also takes a bit of time to figure it out. But at the same time, we are actually, redeveloping the Stability and Growth Pact as we speak. So we have intense discussions on that. So how do you make sure that the fiscal policy rules, because we have to also protect the euro, the stability of the common currency. How do the fiscal policy rules react in such a way or induce you to react in such a way that you build buffers in good times? If we only had them to build buffers, and then you could be resilient and use them in bad times. Now, this has been a very bad time for Finland because ever since the global financial crisis, we've been taking a hit one after another. Our public debt ratio compared to GDP, so debt to GDP, has increased from below 40% to now 70%. And we have these debates around the table where others are not yet there and they sort of think that are you complete idiots in Finland because you have gotten yourself in such a trouble. When you look at what has happened, is this one shock after another that has been very bad from Finnish point of view. And we go back to the issue which is the view of the, the government has been, even though it is in a caretaker mode now, is still the thing that we need a very good private sector. We need the private sector to grow in order for us to have something to tax and build those buffers. So this is a huge question when we do the transition, green and digital and all the things that we need to do, that we do them in such a way that they are not as something done only with public money, but the private sector has a huge role. And then we come to the constraints that we have, which is, for example, a key one, which is lack of labor, because everybody's aging. So I don't think I will ever retire unless I go completely caca. So it really is.
Maybe you should move to France because you should be sort of the perfect citizen for Macron. Unfortunately, time moves quickly, so it's soon time to wrap up. Without giving any advice to the current central bankers, could you please just say a few words to the people here at the seminar, if you could actually give us any advice on how to think about resilience and navigating in these times from of course, a macroeconomic perspective.
Yes.
Thanks.
And let me use some sort of experiences I have from the early 90s when I was head of the Bank Restructuring Agency and dealing with our banking crisis in Sweden. Back then, it wasn't all that unusual that some bankers came to me and said, Stefan, you are responsible because you created this macroeconomic mess. That's why I went under. It's actually the other way around. If you run a company, it's your responsibility to understand what's going on in the economy. And you will always be held responsible. So you actually need to spend a bit of time understanding what's going on in the world, and there is no free lunch. And the best way to survive, that is to adjust and adapt as quickly as possible.
Absolutely. This is, completely true. And I have to say that, don't delude yourself in thinking that the world is somehow normal. In these times when we talk about these huge mega trends of geoeconomics and even G20 wondering whether it can stay together, and we talk about the global south and whether the Western countries can align themselves, you have to do scenario analysis. You have to prepare for unexpected. We've had discussions whether unexpected is something you can prepare for, but at least you have to make sure that you're resilient enough, and then you come to the issue of your balance sheet. And I think private sector will have to take care of it as well as the public sector. All of us have to prepare in a similar manner. Thanks.
And on that very realistic note, it's time to say thank you.